When you're talking about the cement sector, the entire space, it's been a similar story that's been unfolding till last 8 to 9 quarters. You actually saw most of the companies beating earnings expectations by a large and handsome margin. This time around, due to rising inflation, rising coal, petcoke and diesel prices, a lot of the companies have severely seen their margins getting eroded, and this is something that has led to quite a bit of a worry. In fact, it's not just cement companies, not just commodities, even FMCG companies, everyone has felt the pinch of inflation, and this has been reflected as far as the margins are concerned. It started with Ultratech Cement, the sector leader, disappointing on the margins trend, saying that due to rising inflationary trend, kind of inflationary trend that they haven't seen for a very long time, it has actually made a lot of the cement companies wary, and a lot of companies in their conference call. So when you're talking about Heidelberg Cement, you're talking about Ultratech Cement, even India Cements briefly alluded to it, Ramco Cements too. A lot of these companies have alluded to the fact that they would now be requiring to take price hikes in order to protect their margins. And we understand that a lot of the companies have already begun to take price hikes, and price hikes have been quite large, even when you compare it on a seasonal basis, given the fact that input cost pressures are actually at multi-year high. So coal prices, petcoke prices, diesel prices have been the dampener as far as the sector is concerned. Now, in that backdrop and in that context, it's also important to note that a lot of cement companies have significantly fallen off the top, and this has led to valuations once again getting slightly attractive, especially if price hikes do come in through. Ambuja Cements revenues coming in at close to 3,237 crore, and this is on the back of sales volume growing almost 9.3% on a year-on-year basis to 6.2 million tons. Growth in north as well as west-south regions was quite impressive. The company also said that the sharp rise in input costs led to a sequential increase in operating costs of almost 9% to 4,087 rupees a ton. And EBITDA came in at 702 crore, a slight miss to the poll, slight miss to the estimates. Profitability, coming in flat, close to the 440 crore mark. Margins, almost over 150 basis points dip was what was being seen in this particular quarter. Commencement of the new plant in Marwar, this is something that will cheer the market, because when it comes to ACC and Ambuja, it's always been a worry whether the companies have invested enough in India. So commissioning of new facility is quite good. Credit Suisse, in fact, feels that it's time to upgrade the stock. They've kept the target price at 450 rupees a share. They're saying reasonably strong results given cost pressures. They are upgrading the stock on likely pullback in coal prices, and also due to the underperformance that the stock has seen. They believe stock has corrected quite a fair bit from the top.